All right, welcome to The Explainer. So, Netflix just dropped an earnings report that looked amazing. They beat all the expectations, and then the stock immediately tanked. So what in the world happened? That's exactly what we're digging into today. We're going to break down this massive, super high-stakes pivot Netflix is making, moving way beyond its streaming roots. And trust me, it tells us a lot about where the entire media world is headed.
So this is the big puzzle we need to solve. I mean, on paper, Netflix had an absolutely killer quarter. They brought in more money than anyone thought they would, and their earnings per share way up. But the very same day they announced all this great news, Wall Street just panicked, and the stock took a nosedive. It feels like it makes no sense, but it actually points to a much bigger, more interesting story.
You can see the paradox right here in the numbers. Revenue and earnings didn't just meet expectations, they absolutely smashed them. And yet, boom, the stock drops 9%. So why? It all comes down to two little words: weak guidance. That's the company's forecast for what's coming next. It's basically Netflix saying, hey, things look great today, but there might be some trouble on the horizon. You have to remember, investors aren't really trading on what happened yesterday. They're betting on the future, and that weak guidance really spook.
To really get why everyone's so worried, we have to understand that the entire game has changed. You know that golden age of streaming? That whole era of easy, explosive growth where everyone was signing up? Yeah, that's officially over.
This chart right here, this tells the whole story. Just a couple of years ago, the streaming market was growing at a healthy 16%. This year, it's sputtered down to 5%, and by 2030, analysts think it's going to flatline at less than 2%. The pie is pretty much done growing, which means the fight for every single slice is about to get really intense.
And because of that slowdown, Wall Street has totally flipped the script. The big question is no longer, hey, how many new subscribers did you add? Now it's all about, okay, how much cash are you actually making from each person who's already subscribed? Profitability is the new name of the game. Metrics like ARM, that's average revenue per member, are now king. It's a complete rewrite of the old investment story.
And Netflix is not sitting around waiting. They are responding to this new world with a huge pivot. They're trying to transform themselves from just a streaming service into a full-blown, diversified media engine. And it's all built on three powerful new pillars designed to bring in the cash.
So pillar number one is advertising. Yeah, you heard that right. For years, Netflix's whole identity was being the ad-free paradise. Well, that era is over. Now they are aggressively building a massive, world-class advertising business right inside the platform. It's a move that would have been totally unthinkable just a few years ago.
And they are not thinking small here. The company is projecting a jaw-dropping $3 billion in ad revenue for this year alone. That's literally double what they made from ads in 2025. It's a huge signal of just how serious they are about this being a core part of their future.
Okay, so is it actually working? Well, the early signs are a definite yes. They've already pulled in over 4,000 advertisers, which is a 70% jump from last year. And here's the kicker. Over 60% of all new signups are choosing the cheaper plan that has ads. That means both sides of the equation, the advertisers and the viewers, are buying in.
The second pillar is basically a direct assault on the last thing traditional TV had going for it: live content. Netflix is jumping headfirst into sports and live events to create those you-have-to-watch-it-now moments. You know, the kind of stuff that makes a subscription feel totally essential and makes you think twice before hitting cancel.
And hey, you don't have to take my word for it. Here's co-CEO Ted Sarandos explaining the strategy himself. He says it's about creating communal viewing. Think of it like the new water cooler TV for the streaming age. Something that gets everyone talking, keeps them subscribed, and of course, brings in huge ad dollars.
And if you want proof that this can work, just look at Japan. A mind-blowing 31.4 million people there tuned in to watch the World Baseball Classic on Netflix. That made it the most-watched program in the history of Netflix in that country, ever.
And the business result? It was just as incredible. That one baseball tournament drove so many new subscribers that Japan became Netflix's #1 country for growth in the entire world for that quarter. That, right there, is the power of live sports. All right, the third pillar is the real long-term bet, but it might just have the biggest payoff of them all: video games. And this isn't just some gimmick, it's a strategic move to capture more and more of your total screen time.
The scale of this opportunity is just massive. We're talking about a consumer gaming market that's worth $150 billion. If Netflix can capture even a tiny slice of that pie, it would completely change their business. For now, it's mostly a tool to keep you engaged and subscribed, but you can see the long-term ambition here.
But, management is being realistic about it. As co-CEO Greg Peters says, they're making progress, but it's still super early. This isn't a quick win. Think of it more as a foundation they're carefully building for the future.
So let's bring it all back to that first mystery. A fantastic quarter, but a tumbling stock price. This huge three-pillar pivot is the reason. It represents both this massive opportunity and an enormous risk, and that's why Wall Street is completely divided. Here's the debate in a nutshell. The bulls, the optimists, they believe Netflix is brilliantly evolving into a more profitable, more resilient media powerhouse. But the bears, the skeptics, they see a company getting into really expensive new businesses, ads, sports, gaming, that are super complex and a fierce competition. And they worry it threatens what made Netflix great in the first place. The bears are pointing to what looks like a perfect storm of challenges. The market's saturated. Their content budget is ballooning to $20 billion. People are getting tired of all the price hikes. And the competition from Disney, Amazon, and even YouTube has never, ever been tougher.
This comment from a user on Reddit just perfectly nails the core fear of the bear case. In its hunt for new money, is Netflix losing its soul and just rebuilding the same old, bloated, expensive cable bundle that it came along to destroy?
So it's clear the company is at a major turning point. The next 1 to 2 years are going to be absolutely critical in proving whether this massive gamble pays off. So here's what you should be watching for. There are 4 key things to monitor. First, ad revenue. Do they actually hit that $3 billion target this year? Second, live events. Keep an eye on the viewership numbers for the big fights and other major events. Third, the 2026 World Cup. Will their huge bet on the world's biggest sport drive a massive wave of new members? And finally, gaming. Watch for any sign that it's shifting from just a free perk to something that actually makes the money directly.
Which leaves us with this final big question. Is Netflix successfully digging a new, wider, and deeper competitive moat around its business with all these new ventures? Or is it just building a more expensive, more complicated castle that's actually going to be even harder to defend? The next few quarters, well, they're going to give us the answer.